Hey guys, welcome back to the channel of Let's Make a Mill, as well as my own personal blog, letsmakeamill.com. Today's video, I'm going to give you guys kind of an explainer of what Fundrise is. I've been asked a couple times, hey, what is Fundrise? How does it work? Things like that. And I kind of pointed to my other videos. I think I only have like two videos. One is an investor analysis update, and the other one is kind of just a look into my Fundrise portfolio. But I thought I'd just make another video kind of giving the explainer of what Fundrise is and why would you invest in it. And then I'll give you kind of a brief overview of my own personal account. So for those of you who don't know who I am, I'm Eugene Vasquez. I'm basically using this channel to document my journey towards making $1 million. And I do that investing in the stock market. I do that investing into real estate investment trusts known as REITs, such as Fundrise and Avalon Bay Communities that are available on the U.S. Stock Exchange. And I also invest into real estate as well. All right, so without further ado, let's get into the video. So what is Fundrise? Fundrise is a crowd-funded real estate investment platform, which means that it pulls together investors to go after assets or real estate investments, right? You as an investor, you can start with something as low as $500 and you'll get exposure to a broad range of asset classes that Fundrise is investing in. Now, you don't have direct ownership in the real estate, but that's not exactly a bad thing either, because then you'd be dealing with tenants, trash, and toilets. And believe me, when I say this, it can become a headache. So that is kind of what the platform is, and that's kind of what Fundrise is. Fundrise is also a REIT, which stands for a real estate investment trust. All right. Basically what it is, it's an entity that invests into real estate and then it pays back shareholders, right? If you invest with Fundrise, you become a shareholder, right? And they pay you back in the form of a dividend, which is produced from the rents that Fundrise collects from all the assets it has. They also do eFunds and other types of investments where they'll buy a building, rehab it, and then sell it off, and you will also see a realized return from that sale on that asset. Fundrise invests in physical assets like single-family homes, multifamily homes, apartment buildings, mixed-use, commercial. They do renovations. They do commercial loans, I believe, and they do a couple other things here and there. But that's basically Fundrise in a nutshell. It gives you exposure to real estate, right? So, with real estate, if you're trying to invest into rentals or things like that, there's typically a high barrier to entry, right? With Fundrise, all you need is a low $500 minimum, and you can invest in like $100 or $200 increments after that. So you get that exposure. There is a difference between Fundrise and, the REITs that are available on the stock exchange. Primarily, Fundrise is a liquid investment, meaning that if you put money into Fundrise, you're not going to be able to pull that money out tomorrow. It does not trade on the stock market versus like Avalon Bay Communities, Essex Property Trust, Camden Property Trust, and all these other REITs that are available on the stock exchange. Whereas if you were to purchase those stocks, you can actually sell out of those stocks the next day and get your money out. With Fundrise, you cannot do that. All right, so there's a big difference. Fundrise is a non-traded REIT, all right? So how does Fundrise actually work? When you log into the platform, or when you get to the platform, you can actually choose one of three starter packages, right? If you're, low capital and you have under $10,000, you can invest in a starter package, which will get you exposure to a couple assets. But anything over that, if you start going for like the $1,000 package, you can actually invest into three different types of portfolios. One is the income-based portfolio, which is more focused on dividend income or consistent income. So they're investing in things like single-family homes, rental properties, things like that. Then you have the balanced investing portfolio, where they're looking at assets that can appreciate in value as well as produce income from the rents, right? And then pay you, the investor, a dividend income. On the third package, or the long-term wealth building portfolio, they're looking at buying assets that will appreciate in value over time. And this can be through renovations, redevelopment, purchases of single family homes, purchase of apartment complexes, multifamily properties, things like that. So that's the differences between these three portfolio types. You can choose which one you want to go with. Then you'll just add money over time and just watch your portfolio grow. I I've never actually tried to switch plans. I've always just stuck with the long-term plan, but that's just me because I'm looking to build wealth over the long term, and I plan to keep my money into Fundrise for at least a minimum of 5 years. All right, I'm already in year number 2. Fundrise also offers what they call eREITs and eFunds. And each of these two investment types have different objectives and goals that they invest in. So for the eREITs, you have like the Heartland eREIT, the West Coast eREIT, the East Coast eREIT. I believe there's a Washington, D.C. eREIT, a couple other different eREITs, a South eREIT. And these are REITs that are investing in these particular areas. And again, they have their own objectives, their own performance over time, and their own kind of assets that they're looking at. And then you have the eFunds. The eFunds are funds that are put together. You have like the growth fund 1, 2, 3, 4, 5, 6. You have the Los Angeles eFund, the Washington D.C. eFund, and these funds are basically looking at purchasing big time commercial properties, big time apartment complexes, renovating them. So on top of that, you can also view the projects and the progresses that your eREITs are invested into, right? On the platform, you can look at your account and it'll show you everything that you're invested in, and you can actually see the progress as they move forward. Of course, you don't have a say in this investment because this investment is completely passive. You're giving your money into Fundrise and letting Fundrise's management team manage your money and your investment. Okay, so when you invest into Fundrise, it's completely passive. You're not dealing, again, with the tenants, the toilets, or the trash. Fundrise also pays you a dividend. I believe it's 4 quarters. They will pay you every quarter all the way through until December, right? So every quarter, just like the REITs traded on the stock exchange, you'll be paid a dividend, and the dividend is paid from the rent that the REITs are collecting. And for those of you who don't know, REITs are required by law to pay out 90% of the income generated from rents to you as the shareholder. So your dividend will be paid to you based on the rents that it collects. And again, this all depends on kind of the plan you chose. If you went with a starter plan, income focused plan, or a balanced plan, or a long-term plan, that will affect your dividends and how much you're getting. Because I know with the long-term plan, my dividends aren't that impressive, but the appreciation that I've been getting is kind of outweighs that. It makes the dividends, like I'm not worried about the dividends because again, I'm looking for long-term wealth. I'm looking for a long-term play. So I let my money just compound. And the other good thing about Fundrise is when you get paid a dividend, you have 2 choices. You can either use the DRIP plan, which is the dividend reinvestment plan, where they will take your dividend and just roll it back into your investment, which creates that snowball effect that we all love, so for long-term growth. Or you can have the dividend paid directly out to you into a bank account. And then at the end of the year, you'll have to do taxes and all that other stuff. The taxes will still be done with a DRIP plan. The only difference is you're not paying a fee for that DRIP plan. Back in the day, a little off topic, but back in the day when you would buy REITs on the stock exchange, whenever you got paid a dividend, you could either take that dividend and reinvest into another company that you want, or just have that dividend reinvested into the REIT that produced that dividend, right? There's a good couple benefits. One is that you would pay no fee for that reinvestment, and 2, you'd be able to buy fractional shares. Nowadays every brokerage almost offers fractional shares, so that point is almost moot now. But still, it's still a benefit that I think is that it's automatic, dividend reinvestment plan. So why should you invest with Fundrise? Well, here's the thing. When you're a brand new investor or you're an investor on your journey, you'll read a lot about real estate. A lot of people talk about real estate. There's a lot of glamour, a lot of romance with real estate investing. But the realism is that a lot of new investors, or a lot of people who are starting to take their wealth generating seriously, they can't just hop into real estate without saving a sizable cash down payment. On a $100,000 home, you need to $25,000 in cash just to put in an offer. And not only that, you need closing costs and you need to pay the realtor fees and all those other fees on top of, any potential rehab and things like that. The cost could be almost $25 to $30 to $35,000 depending on the asset, the area, the market. So with the good thing about REITs is that, you can just put in something like $50. The good thing with Fundrise is that you can put in, $500, and then you have that exposure to real estate, so as real estate markets go up, so will your wealth. As real estate markets take a hit, you'll also take a hit. But here's the big difference between Fundrise and a publicly traded stock REIT like Avalon Bay Communities. Avalon Bay Communities is tied directly to the market. It's volatile. It can go up tomorrow and go down tomorrow. It goes with investor pessimism. It can go with investor who are bullish on the stock. There's a lot that can make a stock rise and a stock fall. Versus Fundrise, it is not correlated to the stock market. So when you put in that initial investment, tomorrow your shares aren't going to drop. All right. Or the next day, your shares aren't going to rise like tremendously crazy. So that is another difference between Fundrise and these publicly traded REITs, is that Fundrise is not correlated to the markets, which is good because based on this last recession or the recession we're still in, depending on which analyst you follow, REITs lost a lot of their value. At one point, they lost almost 30 to 40% of their value, and they still haven't recovered. Whereas Fundrise, your capital, your money was preserved, so it was good. I had money in both Fundrise and in the stock market and in REITs, and REITs took a huge hit. With Fundrise, my money stayed pretty stable. Of course, I couldn't pull the money out because they have redemption fees. And not only that, they paused the redemption because they wanted to keep the greater investor community at large protected and stop people from fear selling. So that was a good thing. At least in my opinion, that was a really good move by Fundrise. And that's kind of why I invest with them also, is because they're a very responsible company. So I already touched on the low barrier to entry with Fundrise versus physical real estate. I'm also going to talk about the passivity, I guess if that's even a real word, about Fundrise. When you put your money into Fundrise, it's a completely passive investment. You're not dealing with the tenants, the trash, and the toilets. You're not dealing with the repairs that can cost you $500 to $1,000. You're not dealing with, the taxes. You're not dealing with the insurance. You're not dealing with the mortgages. You're not dealing with the paperwork. When you put money into a REIT, the REIT handles all of that. And then you get paid as an investor a dividend at the end of every quarter or the end of every month, depending on which REIT you invest with. And then you just, claim all that income on your taxes. Now, there are some tax implications with dividends, and I recommend you research that. I'll include a link down below in the description for those of you who just want to, a little bit more information about dividend reinvesting or dividend taxes with REITs, because they are not taxed like, taxes from a company, let's say ExxonMobil or Delta or 3M or Microsoft or Apple. REIT taxes are a little more different, and they're not more complex, but they're just a little more different. And as I said, Fundrise is not subjected to the market volatility that is the stock market. When you invest with Fundrise, your money is pretty well preserved, and unless all their assets catch on fire, you're not going to be losing your capital. I have personally not lost any money with Fundrise, and I'm been a happy investor. We're gonna go ahead and take a quick look at the actual platform. I'm gonna go ahead and log in here, and then I'll show you guys kind of what I have so far. All right, so I just logged into the account. As we can see, I've been a member since June of 2018. I have a cash value of $21,266. My net returns to date has been about $1,300. And I'm in the long-term growth investment plan. My account level is advanced because I have over $10,000 invested. But we're going to go ahead and just take a quick look through the platform just so people who have never been in or logged in can see kind of what's going on. So scrolling down, like I said, they will actually show you your recent activity, your recent projects, the progress, things like that. And they give you kind of a pretty good overview of what they're doing. And you could search these projects, like you can click on them and see kind of like a little more information about them. Oh my God, my mouse is messed up. Sorry. You see some pictures, things like that. But that's really it. I mean, there's not anything too fancy about this. What I think is actually pretty cool, I'll show you here in a minute, is you could check out the performance of all the REITs that you're invested into with Fundrise. So over here on the right side, you can see your portfolio, and they have their own ratings for all these. Obviously reds being the more riskier, high value plays or high return plays versus the safer assets, that are going to appreciate in value, but they're probably going to produce lower income. So you'll probably see better return on investment when they sell. And then, you have the green and dark green, which is kind of a mix of in between. But that's everything. You can see your projects, and you could also see your dividends. Oh, sorry. You can also see your dividends. I'm expected to be paid my dividend here shortly. I already received the email. It just has not updated the platform just yet, or the console just yet. So my goal is to get this to $100,000, hopefully in the next couple of years. And the reason for that is because real estate has typically produced between 8 and 12% returns, sometimes higher, of course, depending on the markets. So on a hypothetical $100,000, I could hopefully see, I could hopefully see $8,000 to $12,000 returns per year. Of course, I'm just going to snowball that into the account and just let it grow over time. So we're going to check out the performance tab. And this is kind of what I was telling you guys about earlier. You can kind of see all the REITs that you're invested into, as well as the funds. Like I said, they have the National eFund, National eFund, or Los Angeles eFund, and the National eFund, sorry. They have the Growth REITs, the Heartland REIT, the West Coast eREITs, the East Coast, and they all have their different goals and objectives and what they invest in. And you can see the performance and how they're doing over time. Of course, with this pandemic that we're having, it has affected real estate and it has affected Fundrise. There really is no sector that was not affected by this pandemic. But nonetheless, I still invest with Fundrise. I've been pretty happy. And again, I'm looking at the long term. When you invest in real estate, you cannot count the days and weeks or months. You need to count the years. All right. And that's how you gauge performance with real estate. So going down, here's just some more numbers. Like I said, I've been kind of just like growing the portfolio over time. And then, only recently did I really start getting it really high. And, I hope by the end of this year, I'll have about a $30,000 cash investment. If you haven't checked out my buy update video, I'm going to start doing buy updates every other Friday whenever I get paid. And then hopefully I'll get more money into Fundrise. So you'll get to see my account grow over time. So that's that. We're going to just check out the portfolio real quick. So the other cool or neat thing about this portfolio is, this platform is it tells you where all your money is being allocated into what REIT. So you can kind of just get an overview of everything, right? So this is what they look like. These are my cash values and kind of what their appreciation or the returns are. The percentage of portfolio, cost basis, the estimated value, and the position total. All right. So we're just going to scroll down just so you guys can see. And then I'm involved in 167 active projects. Here are the projects. So you can actually click on these and get kind of a little better view of it. You can view more details as well. And it'll take you to the page, and then you can just see things. I mean, to me, it's pretty cool that you can see this kind of stuff and that they're pretty, transparent with what they're doing or, why they're investing in this area or what they're doing. I think it's just pretty cool, and they just give you some more information down here. But that's pretty much it. That's all there is. Fundrise is pretty boring. I mean, you just put money in, you let them do their thing, and you go about doing your own thing. the thing that matters to me the most is that my money is safe, my money is compounding, my money is growing, and I am going to see a return on my investment. And I'm doing it all passive. I don't have to worry about stuff. I don't have to worry about, the late night phone calls. I don't have to worry about, interest rates and, down payments and rehab work and all this stuff. I don't have to worry about any of that. That's Fundrise's job. Me, I'm just an investor. I want to put money in and I want to get money out. That's my thinking anyway. And there you guys have it. That's Fundrise in a nutshell, just kind of what it is, what it does, why would you invest in it, things like that. And I gave you guys a quick overview of my own personal account. If you guys have questions, feel free to let me know down below in the comment section. I'm more than happy to help you guys out. I hope this video provided you guys some value, or at least some information that you guys can take away and use for your own investment strategies. If you guys like this video, let me know. If you didn't like it, just the same, hit subscribe, notification bell. I'm trying to release more and more content as time goes on. But I'd really like to know if you guys enjoy this kind of stuff. But anyways, with all that said, see you guys in the next video. Thanks for watching.